Good morning. It is just after 9:15 on the 11th, a Thursday of April 2019. This is Eve from MarketWizards.com and eMiniWizard.com, reminding traders to use risk capital you can afford to lose. Markets can and do strange things, and we never know which direction it's going in truth, but we use ideas to help us understand, take ideas from the past and apply it to the future. And you really, if you're going to be a trader, you make it in the present time, not in some fantasy land above 29 or below 78. That's the range. And I posted to a very smart trader who was on the floor, has a nice following. I like him. I like his posts. But in reality, it's as a trader, it doesn't matter whether we are, if we're in a, let's just take a 10-point range, doesn't matter whether it's from 2,900 to 2,890 or whether it's 2,900 to 2,910. There's no difference. It's a 10-point range that you're trading and trying to capture something out of that range. So that was my response to his post, and certainly, not disparaging him at all. I like him. I think he's a great trader. But I think a lot of times traders miss that idea that, and there's a business about trying to get our VIG. It's an ATM machine for those of us who know how to take advantage of opportunities. And obviously, sometimes it's going to take money out of our account, and other times it's going to put it in. So, in terms of being tired, it's not necessarily that we are tired as much as we're base building. We know that we've got a range back here from, say, 70 to 2,900, about a 30-point range. So if that's true, then we know that that 85 has got to be the middle zone of that. And I have said all along that I believe right now that that 69 to 71, if you average those two together, that's 70. So that's the 30-point range that I'm referring to right now, which is about a 1% idea. So I cannot make it any simpler than that in terms of saying it appears right now that we are base building, trying to get above 29, have not been successful yet. We can see this is a double, and then this is the second double in here. And when will we break it? I don't know. You don't know. Nobody knows. When the market is ready, it'll do that. And then it still has to stay in new conquered territory. So we've been using this target line as our resistance. It's 2902.5. And that's the way I'm seeing that. And therefore, yesterday's 85 has got to be a big idea in that frame that I'm showing you from this 70 to the 2,900 area. So this 82 to 85, yesterday's support that we had suggested, this area is going to be critical going forward. Even if we do take that out, it's still going to be an important idea. We certainly got gaps below us and whatever. So that is our immediate support based on yesterday's trading. And we are still trying to tackle the highs and see, can we get above and then stay above. So anybody that's trading right now, understand that type of a relationship. And if we get above the 2,900, the first and most important thing on new conquered territory is make sure you get paid. Either move stops up or you just get paid. So pretty choppy right now, and rightfully so. We did hold that scene of the crime, that held, and we've had a nice bounce, but still, it's just a very tight range, and it's range trading. Those of you who played early and got your 96 tests, good for you. I know it's never easy trying to fade when the market looks like it's going to go forever, but that convenient trade was great. That worked. We came back. We got our 96. This is that third time through trade right here at 96.25, where I described it. Right here. This is your third time through, right? And then we come back for the retest. 1, 2, 3, and up. Double top, come back. Thank you very much. Stalled for now. And this is a program trade overnight, one straight shot. So this is your 4, 5, 6 trade, and not quite 5, but certainly got the 40 back. And I said, make sure you paid 96.5. So here we are. So let's look at a couple other ideas. And we're going to talk about a few things today about travel range and about, your style of trading. You can see where I put 1, 2, 3. That's been our resistance box. This is our fighting box, and this is our support box. And obviously overnight, this was our support box, then the fighting, then resistance, and got through this. So we got the double top this. So one of the things that we want to stay aware of is last week's high is right here. This is part of the trade dynamics right now. Not just at 2,900. We've made very little progress this week getting above last week's high. So we want to monitor that as well. And that's why I keep saying that there's a number of things. Anytime you look at it, not just about any one element, there are a number of things to look at. So if we lose this, and that's one of the reasons why 98 to 02 is our resistance zone. You've got to get it up here and sustain it up there. And we've not been able to. So I still think it's two-way day. I think yesterday caught a lot of the traders off guard. And I think today we need to be conservative about expectations long side. If we get it, we get it. And if not, it doesn't matter. We're still trading a range. The disconnect with the NQ is somewhat surprising also. Let's take a quick peek. And we can see where we've taken out that on a monthly basis. We've taken out the March high, and we've been coming up higher. So this chart tells me that if I'm looking at 75.80, that seems to be a support. 75.60, even if you average them, say, okay, 75.75. I mean, this market has been marching upwards, and you can see that. So this tells me right now, just looking at this relationship, that this 7,600 to 7,610 is an important support idea right now. Anybody that is playing alongside and saying, I want the breakout trade, these are all weak hands compared to the opportunities that we had to buy yesterday. Just a reminder. And bots don't care. Bots will buy until the cows come home and then say, okay, I'm not worried about my emotions. Just give me my target and give me my stop. Angels and demons. 91 is our angel. Demon is 98.25. Midpoint 94.75, and that is the gap right here. And I do have that 98 line here to remind me of last week's high. Breakout yesterday, right here, and then held. We said the 89, 90.25 needs to hold. This is all done in late buy and then overnight. So, a lot of fluff here, not a lot of volume. And that's where a lot of times Charlie gets sucked in. We'll get a new high even, and then we come back through and not a lot of support built up. So range trade for now is the call. And if you're conservative, stay sidelines for a couple of minutes and then make a decision if there's a trade that makes sense for you. Now, I had suggested let's think about the range from 95 to 2,900. And I made that back at 7 o'clock, and we're still in that range. And this is the way the market likes to move. A burst and consolidate, and a burst and consolidate. Momentum, morning after trend day, above 96 is up and running into theoretical resistance so far. This little double right here is the key today. Above that, the market can chop or go higher. Below that, we open the door to come back down and test 88s, 85s, 82s. And we said, let's use 92 as our aggressive support zone. All right, play well. Good luck.